Hey guys, how's it going? It's Andy from Magoo Investing. Made it through finals, or not through finals, we made it through midterms, and I'm ready to get back at it and making YouTube videos. So something I'm going to be talking about today is called dollar cost averaging, and I'm going to be comparing that to another approach, which is called lump sum investing. So dollar cost averaging is the idea of, say you buy a company, you buy one share at $100. So on paper, you have one share at an average price of $100. And now let's say the market starts going down, kind of like it did for the past couple months. Now it's sitting around $80. So if you put all of your money in when you had $100, say you bought another share at that point. So now you'd have two shares at $100. Dollar cost averaging is the idea of you buy when it's high and then it starts sliding. And instead of panicking and selling, that's when you're going to be picking up the pace with your investing. So you'd be buying another share at around $80. So now for you to break even, you'd have two shares at an average price of $90. So you can just kind of figure that out by just add up your share that you bought at 80, 100, divided by 2. That's how you figured it out. Pretty basic. So now all you have to do for your stock to break even is to get to 90 instead of 100. So this works when the market's kind of going up and down, which has been recently. So the lump sum looks really great if you do it and the market just keeps taking off. But you put yourself at a really high risk that if the market starts sliding, you lose the 20% like it did in October through December, you're kind of out of luck at that point. You're just kind of waiting, and you have to wait for it to climb all the way back. So I'm going to pull up on the screen right now the NASDAQ Composite. And this kind of just averages some of the bigger companies in the market. All right, guys, so now we're over on the Acorns app. We're actually on the desktop version because I think it's actually easier to show than the app. But as you can see right here, I'm finally in the green now, up almost $6. You know, really made it worth it these couple months. But so I'm at an account size of a little over $1,100. And I'm not showing this kind of brag about, oh yeah, I got this much money, which really is not that much money. But I'm just kind of showing that if you remember from my last video in December, I had around $600 in here. And so I was adding a lot every week when I was working where I could afford that. And then I stopped working and I just consistently added. And during this time, the entire market was going down. And so I wasn't panicking. I was just kept adding on to it because I knew this is what dollar cost averaging was. And so we get to this point right here and you can see that the amount I've put in kind of took off. And so when we go over to Thinkorswim, you can now see this is October 1st. This is where it peaked. And so during this whole time, as it's coming down, I was adding in constantly. And then we get to the day, Christmas Eve, I believe, and it was the worst point loss in stock market history. And so I thought, oh man, that's a really serious deal. And so I started putting the money that I got for Christmas, and I ended up just kind of kept adding to it right here. So you see we have the peak over here on October 1st, and all this way down, I kept adding on to my position. A couple times where I thought maybe it was going to pull out of it, but it just kept going. And then December was a really bad month. And during that time, I wasn't panicking, just kind of doing my own thing. And then I realized it was starting to form a bottom right here. And so after this day right here, I started just throwing as much money as I could afford into my account. And so this is where it starts taking off. And you can see that I started adding way more money than I had before. And so I am now broken even. And I started investing over around here. This is July. So we obviously have not come back to this point, which kind of shows the importance of dollar cost averaging because I added a majority of my stuff on the way down. So I have shares of this company or these companies at a lower price than when I started. So instead of having to make it all the way back up to these October 1st highs, we're sitting here. Let's see how much further down this is. So during that time, it went down around 24%. And at this point, we are still down 10%, and I've broken even. So whenever it gets back to that point, I will probably be around 10 to 11% in the green. Whereas if I just added all my money in right now, or right here as a lump sum, I would still be down 10%. I'd be feeling really bad about myself. So now let's go back over to the actual video and I'll wrap this up. That's kind of the benefit of dollar cost averaging. I bought shares at a cheaper price to lower my average price so that when the market's coming back up, it doesn't have to come all the way back up to where it was. Now we're about halfway or a third of where it was and I'm already in the green. So this is something when people come up to me and they say, hey, I've got some money for Christmas. Should I buy all these shares at one time? I say, no, just take your time. Buy a couple shares now. If it keeps going up, buy another share or two slowly. No need to throw all your money in there because as I said earlier, if you throw your money in and it starts going down, you just put yourself at a bad risk and you're just sitting there and you're going to watch it instead of slowly averaging your way in. Maybe you don't get the best price if it keeps going up, but it's a lot less risky and you're probably going to end up better overall. So hope you enjoyed this video. Hope it was informative. And if it was, please hit that subscribe button so you won't miss any future uploads. And now that the midterms are done, I can start grinding on some more videos. I haven't taken a position in a couple days. I recently closed out my Activision position because it wasn't doing anything, which I'll make a video about probably in the next couple days. But yeah, I will see you guys in the next video.